Yo, my monitor big as shit. I need to like. Is it gonna be like that on the recording? Let's make it like a box. Like that. Alright, that's fine. That's like only the right side of my screen. So trade breakdown. So we have this daily fair value gap, and as we said yesterday, we're still bullish. We want this shit to get taken. I wanted this high. I wanted this high to get taken. Yeah, I had that marked out. So I got too much shit on my screen right now, bro. Okay, so this was the long from last night. That was previous day high. So we came in, swept that, or we manipulated it down, took this low, took that low, came up, and then 10 a.m. was so clean, but I didn't wake up in time. When I woke up, price was like right here. Look at this shit. So we have 10 a.m. right here, aligning with this order block, and then some other shit. I forgot. I think this right here, because like I said, it's the support and resistance right here, this peak. If you draw that out, literally right here, this is 10 a.m. I think. Wait, no, I'm retarded. Okay, never mind. But anyways, I was bullish, right? Because all this shit we manipulated down, and we have equal highs from last night that I got raped on, and then we have the daily high, right? And then going back to the support and resistance shit, if you go to the hourly, right here, I marked this out, this low, because this used to be support, right, to go higher. So now it's resistance. So I marked it out, and by the time I marked this out, I literally woke up like 10 minutes before this. So I marked this out on my phone. I see this shit. I see the peak of it, and then I go down to here, 5 minute, and by this time, it's like this candle, and that's when I jump up and get on my PC. So I see this candle. That shit is clean. Like that's what you want to see for a reversal. So right now I'm just stacking shit up. So if we mark this wick out, I'm just like trying to get confirmation, right? So if we have that, we have a good rejection off of that wick, which is what I want to see. We form this inverse fair value gap, and then I mark out the standard deviation on the 1 minute for this manipulation leg, and then my rules for standard deviation, like another confluence, is I want to see price break structure. So we broke structure right here, right? And then go back and tap ideally 0.79. That's like perfect. So that's, I don't know, the fourth or fifth confluence so far. So we have that. And then we come down, we tap -1. So my rules for standard deviation again is for -1, -1.5. So for -1 and 1.5, either one of these I want to see tapped into, press tap into, and accumulate, and then I want to see a retracement back into the current OTE, preferably 0.79. That would make it perfect. So like I said, this was the high, right? Because we tapped 0.79, so this is now our new anchored high. I would say this is protected if this whole structure, if this point of interest is valid and this is the pivot point to go down. So when we mark this, right, our current OTE, the high and the low. So 0.79, boom, perfect. We see 0.75 along with the fair value gap. We see some resistance right here. But then like right here, I wanted to enter because I was FOMOing, but I wanted to control myself because then I saw this candle right here made me feel like we could mitigate this and then actually tap into more premium entry or more discounted. I don't know the fucking terms, but so I waited, and then I wanted to limit this shit. This 0.79. Oh my god, yo, that shit literally zero tick drawdown. but it tapped into it. And so I instantly got on that shit. I deleted, like, you can delete accounts. Because I had 4 accounts that were like locked up from last night, daily loss limit, and I couldn't trade. So I wanted to take the trade, so I deleted 4 accounts. I activated 4 new ones, and then I market ordered, like, because another thing for my strategy is, if the trade is valid, if the standard deviation model is gonna really get respected, when you tap 0.79, there's no mitigation. It's by the tick. It's super precise, and the high is for sure. This is protected for sure. So any shorts down here, stop. If your stop is here, you're good. So I got impatient, so I market ordered somewhere here, and then just stop at the high. And then we also had this shit. We had order block, and then we had a rejection block as well. So all this shit was nice. And then seeing the sweep was nice as well. This is something I've accumulated or added into my strategy list very recently after I watched your shit from Arctic. These inducements, like these resweeps of internal liquidity before retracing. So now I'm adding that as a new confluence, and this shit's nice. I never noticed that before. So we have this internal high inside of this shit, and then we just dumped. I needed 1600, or I wanted 1600. It was fresh accounts, but my other one account that hit daily loss has 1.6k highest daily profit. So I wanted, like, because your consistency is based off of the highest day that you have, nothing else. So since that account has a 1.6k day max, I just targeted 1.6 something for the other 4 accounts. So the consistency would be all like on the same page. So then I can copy trade them all at the same time. So $40 a point, two minis. So that's like 40 points. I targeted this low, and bang. But structure wise, if I wasn't trading for the money, I would ideally target for -4 and -4.5. This is the max expansion, because if this standard deviation model is gonna get respected, then it's gonna deliver here, which it did, and that shit was so clean. It was like super fast as well. It was so pretty. But yeah, recap. You want to have a valid point of like a pivotal point, or DOL. So if that's correct, then you will see a manipulation, a break of structure. That's where you mark. Well, once you have a break of structure, then you mark the previous leg as the manipulation. You mark this out. You want to see a break of structure, either retracement into OTE or tap into -1 or -1.5 and then OTE. Or since it already did that, then you use this OTE. And then you want to see a retrace into that, and then bang, that shit should deliver. -2. Sometimes negative in less volatile shits markets, it'll like go to -2 or -2.5. It'll like accumulate over here and then retrace to the OTE of this range. Like this is like perfect case scenario, like textbook. So then you'll want to see a retracement back onto here, wherever aligns with the best PD arrays, and then deliver down to the shit. So that's like ideal standard deviation. But in higher volume markets, some of the shit will get skipped. But like the -2 stuff can get skipped, but something that can't get skipped is these initial retracements. So the break of structure retracement and or the -1 and 1.5 retracements, these you have to see this. So this will be the accumulation range, and then you want to see a retracement from here. And if there wasn't a retracement here, and then we just went straight down to -1, -1.5, then you want to see a retracement back up to here, the initial OT of the manipulation leg. So that's why sometimes you see me catch these fucking small ass stop loss trades, because I'm targeting this, and then usually for these the stop is always really small. So yeah, that's a trade.